The upcoming weeks on digital currencies is going to be a buying opportunity, according to Kevin O'Leary, and he has set his eyes on buying some Bitcoin and Ethereum. Bitcoin once traded for almost $69,000 per coin, but started its latest collapse back in May when it fell below the psychological floor of $20,000 due to a broader crypto market crash. In 1 week alone in June, Bitcoin dropped by 30%, and as of late October was still trading at around the $20,000 mark, until now where it is struggling. When such massive falls occur across the table for cryptocurrencies, many investors and enthusiasts begin pushing the old investment, saying that it is time to buy the dip, as many hope these lows mark a temporary downturn rather than a long-term bear market. But is this a smart move? In today's video, we'll be having the person whose success story starts where most entrepreneurs begin, with a big idea and zero cash. Let's hear how and why Kevin will buy crypto after FTX. Despite uncertainty and fear on the horizon of the crypto and financial world, some people are surprisingly very optimistic about the industry, and strongly believe that this is just the beginning of an exciting journey. Kevin O'Leary is chairman of O-Shares Investments and the Exchange Trade Fund, and Older Adventures of private equity firm. Kevin points out that irrespective of whatever is going on in the crypto and financial industry, this is a big opportunity to buy digital currencies and make investments, especially as some of the bad actors are being flushed out of the system. In this video, we'll explore Kevin O'Leary's thoughts on the crypto industry's response to the FTX collapse, his holdings of gold, his thoughts on crypto regulations, as well as the cryptocurrency he plans to purchase more of. Kevin is adamant that now is the ideal time to buy, as was previously mentioned.
Bad regulation or lack thereof, if you want to put it that way, and some very weak compliance management. That's what's happened to these companies. It doesn't change the potential of what crypto is going to be, but certainly it was a hit. There's no question about it. And, you know, it's embarrassing for me, obviously. So much due diligence had already occurred. I mean, if you look at the cap table of who was investors in this company, it's the who's who of financial services. And so I'm one of them. We're all embarrassed. We feel foolish. But luckily, when I look at the long term, thank goodness I make more good investments than bad ones. That's the way I look at it. Over the weekend, the alleged hack occurred. My accounts have zero in them. There is no accounting records there. They've been scraped. I talked to many other institutions about those accounts over the weekend. We were talking with our compliance departments and our lawyers, obviously, and that's where it stands today. Obviously, and I want to make a comment about this, this is a tragic story, not just from a financial collapse, but it's a human story. It's an unbelievable story. It's probably going to be told, you know, for years to come, and the chapters haven't even been written yet. We're not even in the first chapter yet. Everything's allegation and insinuendo. We don't know anything yet. And so I'm trying to keep an open mind about it. I'm not happy. I don't like losing that much money, but it doesn't change anything that I'm going to do tomorrow morning. I'll never put any money into an unregulated exchange ever again. The first thing I did, I mean, we have a policy in my shop that we don't just have diversification on portfolios, we have institutional diversification. We don't put all our capital, our cash, our investments in one institution. We want multiple exposure to different institutions because you never know when an FTX is going to happen or a Bear Stearns is going to happen. I mean, I've seen this movie before. This is not the first time. And so we have a large diversity of where we work with and who we work with and what institutions that we do business with. But the first thing we did with the remainder of our crypto assets is move it up into Canada under the OSC order in the BitBuy wallet, which is owned by Wonderfly. 100% compliant, scrutinized by the regulator there, proof of assets, no leverage on the accounts, no intermingling of accounts. All of that really matters, and that's where I think is the safest place to be right now. I mean, I just took a position and missed them, which is Charles Evan Chung's new team that he pulled out of Facebook. That's a very interesting platform. That really speaks to financial services. So I'm willing to back new teams, no question. But I don't need to have 32 positions. I'm going to consolidate down. I'd rather have maybe maybe we go. We had that debate this morning, just before I came on the air with you. We were discussing this and deciding, where we transfer it from, how it's going to be held. Because in Canada, there's only 17 tokens permitted. That's it. The regulator there has only approved 17. And so we have to go within the context of that. But then we get the benefit of a regulated exchange with all of the transparency and scrutiny that regulators provide. I feel much safer in the BitBuy platform. And WonderFi is a public company, so they have to report to the regulator as well. So I'm good with that for now, but I won't have more than 17. No, it has warmed me up to gold. I mean, here we are, the 1700s, starting to look, there's a bid underneath it. There's no reason not to have a 5% weighting in gold in any portfolio, whether you want to use the GLD or pay for storage of your bullion.
According to Kevin, after it happened, he spoke to different institutions about accounts over the weekend and discussed compliance with their lawyers. He acknowledges that this is a tragic human story, not just from a financial collapse. When asked about his view on regulations and how it affects the crypto industry, Kevin shared that one thing he wants to see most in the crypto industry is for the Stablecoin Transparency Act to pass. However, he said it has been floating around forever in Congress. We got to stop doing this to ourselves. It is time to move forward with regulations despite making losses investing in FTX. Oleary is not deterred from buying more cryptocurrencies, stating that he is still going to invest in crypto. He might have lost money, but that won't stop him from buying more. This is the turning point for the industry, a maturation for this industry. Kevin maintains that he is still bullish on cryptocurrency and will continue making investments. He reveals his recent affiliation with a web-free financial brand Mr. Labs and believes it is the right investment for financial institutions. He also comments on his position on Bitcoin, Ether, and gold. You should invest what you are willing to lose 100% like in Vegas, and discretion and skepticism should be exercised when weighing assets and related products pitched by pro athletes, celebrities, and media personalities, he said. The 4 lessons I have learned after the FTX collapse are: know the risk of where you're holding cryptocurrency. Diversification is always important. Expect more crypto regulation, and back up your crypto transaction records. The credo of buy the dip is based on the idea that price declines are transient aberrations that eventually correct themselves. By purchasing during a relative discount, dip buyers hope to profit from dips by selling when prices start to rise. Buying cryptocurrencies at any price, let alone one that may turn out to be the long-term trend, is risky due to the volatility of the cryptocurrency markets. Prices might go back to where they were, but they also might drop even more, leaving your investments in the red. If history is any indication, this dip, or crash depending on your point of view, may recover as it did the year before, when prices dropped to a similar level before rising to their pre-dip levels and even peaking in the fall. However, they may not as well. Many novice investors have been burned trying to catch falling knives, said Ole Giberston, co-founder of CoinRule. He advises those who are committed to buying the dip to choose a fixed amount of money they feel comfortable using to buy BTC or ETH each month, and to not worry too much about what happens to prices over the course of the next 2 years. By hedging their bets, buyers are advised. To reduce risks, he advised diversifying your cryptocurrency holdings with a variety of crypto coins. Would you also buy crypto after the FTX collapse? Let us know what you think in the comment section. And that is it for today's video. I hope you found this video informative and helpful. As always, if you did, please show us some love and support by giving this video a big thumbs up and subscribing to our channel. And make sure to keep your notifications on so you'll be updated whenever we post new videos on all things related to crypto. This has been Diversified Streams. Thank you so much for tuning in, and see you in our next video.